Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'm going to go through Euro Kiwi, as there could be two opportunities to get long on the market. I'm going to explore those two opportunities and show you the two different ways that you can kind of get into this market. Now, the reason why I want to be long Euro Kiwi, Euro is obviously stronger than Kiwi at the moment. We know this because ultimately we're getting higher highs and higher lows. So we've got this nice little daily uptrend going on through here. Now, within these impulses and retracement phases, typically we see types of trends out of the market. So usually if the daily is in an impulse phase, you'll get a 4-hour uptrend on obviously an uptrending scenario. On a retracement phase of that uptrend, you'd get a downtrend on the 4-hour time frame. So if I go down into that 4-hour, you can see that here is the retracement phase. So let me actually just highlight this inner zone. Okay, so this is the retracement phase where we have the market making lower lows and lower highs, okay, until sort of this point in here, and the market then agrees with a higher high pattern that we're going to see the daily impulse potentially continue. So in that scenario, then I want to be looking for opportunities on pullbacks to get long. Now, I like to look at the previous structure areas and identify some volume levels within that in order to look for those long opportunities. So the recent sort of pullback area is this one here. Okay, so we've seen that the market in that impulse here has created a consolidation here, and then the market has broken to the upside. So the first type of entry is a limit order entry, and that would come in when price reaches this level and we plan to see a rejection of that move. So ultimately you use limit orders on a market that is going against you, or when price goes against you, and you use stop orders when price is going with you. Okay, so essentially here what I'm expecting to happen in this consolidation zone, the most traded level is this high in here. So I'm looking for the market to come and retest this and continue its uptrend. Okay, so limit orders are a little bit more aggressive than stop orders. However, they help you get a better risk reward. So you have to weigh the pros and cons of each. But the first type of entry would be a buy limit order in here. So the second type of entry would be on a breakout. Okay, so if I was to go into the hourly time frame, and again using the same concepts as with a sort of daily and 4-hour, if the 4-hour trend is going to impulse to the upside, we would see an hourly higher high pattern coming from it. If the 4-hour is in a retracement phase like it is here, we can see that the hourly is making lower lows and lower highs. So ultimately you can look for the potential breakout of this trend line in here, because what this trend line is offering us at the moment is a type of resistance. So if we were to see price rally up and break above this area in here, that would be a sign that price was going to continue to the upside, very much like what we have down here. When price broke through this consolidation pattern in here, the trend then continued to move higher. Now that the 4-hour is pulling back, what I'm going to be looking for are those two different types of entries. If we get the entry down here, then great, because we'll have a high risk reward ratio trade. If the market can break and close above, then you could look to buy the breakout candlestick, very much like down in here. Place your stop losses below the swing lows. So at the current moment in time would be this low in here. And that would be your second type of entry into the market. So those are two ways to buy into Euro Kiwi. Hope you enjoyed this video update, and I'll speak to you soon.